long short hedge fund in the world back in 2004. And so for 20 years, I ran billion-dollar hedge funds. 5 years ago, I was a partner in a fund, and I wasn't unhappy. I love investing and all that, but I got very excited about what was happening in the digital world, and I decided to take a step back. I created a business called Project M Group, which is a digital media and e-commerce platform. Own the largest in scene, and we own a bunch of music media brands. We own Revolver and Hot Rock and Heavy Metal, Brooklyn Vegan and Alt Indie, the Hard Times and Punk. We're buying a bunch of other stuff, and that's basically what we do: is we buy media companies but turn them into e-commerce companies. So I built that company to about a $20 million company. We're actually going to launch a fundraising probably next week. But then 2 years ago, I was always going to come back to Wall Street because again, I didn't leave because I was unhappy. My old friend Whitney Tilson had taken this gig with Stansberry Research, which is a really impressive platform, and he basically told me what he was doing, and I was like, "Fuck, that's cool," you know. And what we do is we do publish paid newsletters. Those newsletters, if I was to characterize them, our job is to, or our goal is to inform, educate, and entertain. So we try to do things in a language that can people actually want to read the fucking thing. And kind of what it was in my view was before I was making money for the CalPERS and the fucking United Emirates and all that kind of stuff, which was fine. I didn't really get any philosophical or emotional satisfaction out of it, but not that I needed it. It paid very well. But, Whitney and I saw an opportunity to basically bring institutional class research, what we were doing for our clients, which were giant pension funds, and try to figure out a way to do it, to distill it to, regular investors. And so we launched Empire Financial 2 years ago. We have, a couple 100,000 subscribers. You can check us out at www.empirefinancialresearch.com. And then the last piece of this is last year, I partnered with the founder of the Hard Times, a guy named Matt Sincombe. The Hard Times is a satirical site focused on music and punk. And we created a satirical site called Hard Money. And Hard Money is kind of like the Onion for Wall Street. But what we're doing is we're basically building a business that, imagine it's sort of Barstool meets the Onion for Wall Street, but we actually know what the fuck we're talking about, and we combine it with real ideas. And sort of think of it this way: we're trying to actually give people good ideas, but do it in an entertaining manner so it doesn't feel so fucking dry. And like I don't know, like trying to communicate like a normal fucking person would instead of some I don't know, Wall Street fuck. But so that's what we do. I have three businesses. I've got the newsletter business. I've got the tattoo and music business, and then we have it's actually called Project F, is the company that owns Hard Money, and yeah, that's that part of the background.
That's awesome. It seems like kind of some unrelated businesses, so you've been all over the place.
They're all kind of doing the same thing, though. Is like I work in passion areas that I'm passionate about: tattooing, music, and finance. And I have media companies, and we have direct to consumer, relationships. So it's all the same theme, and I'm just doing stuff that I'm interested in.
Excellent. So was the article that was posted today, was that one of the outcomes of your newsletter venture then?
Yeah, so it is. A little bit of background. So Empire Financial, we publish paid newsletters. I'm not pitching any of those here today. But what we do is sometimes we have pieces of research that we share with the public. In particular, I thought this situation was very ripe for it because frankly, I saw a lot of angst out there in terms of in terms of what was happening, and I thought we could get a pretty good read on the situation. I've been doing SPACs since the late '90s. I've been doing music that whole time, and my e-commerce business, actually 50% of the revenues are in music. And I've done a lot of what they call on Wall Street special situations. So I looked at this. I was like, well, this is going to be a son of a bitch, but I think I can figure it out and actually put something out there that'll help people.
Well, that's awesome, because there's a lot of, I would say, cautiously optimistic people in in this chat that have been invested in PSTH, and I think your letter was kind of a breath of fresh air because it kind of outlined some of the things that I think the announcement and the information that was relayed on late Thursday night, early Friday morning was a little bit misunderstood and underappreciated. And I think that as the weekend's gone on, obviously by the price action today, that people are feeling more comfortable with what has kind of come about. So I guess that maybe you could start there. So maybe if you could unpack the deal as you see it, just real top level. I think most people have a good understanding. You know, we had a SPAC. It's now turned into a smaller SPAC, some type of acquisition with Universal Media Group, and then it's also become a Spark, which is basically not even a shell company. It's just a rights company for a huge entity in the future that doesn't require any capital. Um, is that how you understand it as well?
Yeah, you did a pretty good job. I mean, look, I think that Bill and let me, there's some of the things you asked that I didn't answer. I've never met Bill Ackman. I don't know him. I mean, I'd recognize him on the street. We have a lot of people in common. My partner Whitney knows him quite well. I think they were college roommates, but I know they went to school together and all that. Whitney talks to him on a somewhat regular basis. All the research I'm presenting or all the ideas I'm presenting are my own ideas, based on my own work and, talking to a lot of smart people. I think that Bill has shown, and just so you know, we had an outstanding recommendation out there for PSTH prior to this. So we had done a lot of work on this, in the last year. I think Bill again, I make a reference to John Malone a lot, who's been the greatest single capital allocator and value creator of the last 30 years, 40 years. He frankly blows Buffett away. Like Malone, I think that Bill is fascinated or consumed by how do you create economic value and really create awesome returns. And he's not so concerned about complexity. I don't want to say he embraces it, but I think that you saw that with the original Pershing Square structure, that he was like, okay, there's some good things about SPACs, and there's some shitty things. How do I solve some of the shitty things? And I think what you saw with this deal is kind of the continued expression of that approach to the world. Like, he structured something that he thought was very interesting that further evolved the SPAC world to address what he thought were some of the weaknesses. While, and I want to say this is the most important thing, he did a deal in a fucking awesome company. And, I look, I talk about Malone and how awesome he is and all that. Malone's only awesome because he picks great fucking companies. He happens to do structures around them that are quite clever and value accretive. And I think that's where Bill's built his career, is just picking really great companies. And Universal and the music business overall is a great business. So I think as he went down the road, and again, I haven't had this conversation with him at all. Like, I'm not speaking anything. I think he was probably going down the road and was looking at a bunch of things. And I'm sure, there's been a lot of speculation is like, oh, does he have more deals? Well, motherfucker's got tons more deals. Like, I have no doubt about it. He had the biggest SPAC in the world for 11 months. I mean, he still does. And everyone on earth he spoke with. And I think he looked at Universal and said, this may be the single best business I would have in my portfolio. And so he kind of, I'm sure he went and said, well, this may not be what people were expecting, but torpedoes be damned. I want to buy the best fucking business I can. And so let's do this deal. So that's one part of it. And then second, I think, so that's his motivation, in my opinion. His second motivation is, okay, and I think I can do some things that will further solve some of the problems that I see in the SPAC world, and I'll address those in a second. And third, I think he said we're going to make a shit ton of money, and that's what goes through his head. And one last thing on the address the problems in the SPAC world, both the structures are unique, that they come to the table with guaranteed money for a selling company. The RemainCo has 1.5 billion that he can deploy along with his money, which he controls, so it's guaranteed. And the Spark, away from the rights, has a minimum commitment of $1 billion to $5 billion. So, I do a lot of SPACs. I've actually been involved in getting 3 SPACs done, deals done in the last 12 months. A lot of the selling companies are very concerned right now. You announce a SPAC. It was great when you announce a deal and the stock goes from 10 to 15. Right now, you announce a deal and the stock goes from 10.12 to 9.96. No matter what you announce, that has sellers freaked out, and they don't know that the deals are going to get done. With both Remainco and Spark, he can say, look, I've got a minimum of X billion dollars that's going to happen. You combine that with the fact that he doesn't have, this sword hanging over his head, because 24 months sounds like a lot of time, but when there's 600 SPACs pursuing deals, it's becoming less and less time. So I think he just said, look, I've got a great deal. We're going to make a shit ton of money. And I think I can continue to evolve this structure. I'm sure if we were having a beer with him, I don't know if he fucking even drinks, but like, he'd say, I wish I could have made it a little bit simpler, but ultimately I'm going to do what's best for the long-term value creation of my shareholders, of which he is a major shareholder with billions of his own money deployed.
So talk me through. So talk me through the actual the deal itself. So I think in the deal, 1475 is allocated from your PSTH share. That's gonna be allocated to Universal Music share. Now, that 1475 and the portion of the company we're buying represents 10% of the spinoff from Vivendi Media. Correct?
Yeah, I'm going to rephrase what you said just a little bit, just to make it, because it'll make it apples to apples. He's spending $4 billion for a 10% stake in Universal Music. Universal Music will be a 100% free floating kind of. I mean, Vivendi will still own a little bit, but like an independent entity with an independent board with about 1 times leverage. But imagine, here's $4 billion. I'm putting it over here and buying a 10% stake. That's the 1475, and I'm saying it that way because remember, he's injecting, and I might get some of the exact numbers wrong here because I've been up for many hours. But he's injecting an additional whatever it is, 80 million shares, 1.6 billion into the vehicle. So he's putting more money in. But $4 billion buys 10% of UMG, representing 1475.
So after this deal is complete, the UMG shares will be listed on the Amsterdam, the European exchanges.
Correct.
So at I'm assuming 1475. The other shares that are being sold, and I'm trying to understand this, are they likely to be sold at a higher price to the underwriters at 1475, or will they?
So what I suspect, because there's agency issues here, right? And what an agency issue is when I'm doing deals with multiple counterparties, especially if I'm going to do a deal with public shareholders, I have to be careful not to help one person more than the other. While I think there's the potential that the deal could be priced at a valuation higher than where Bill is coming in, I suspect that the deal will be priced around where Bill is coming in, although I think it could trade very strongly. But I do not have a strong insight into that in terms of the ability to price the deal at a higher valuation than where he's coming in.
Do you see any risk on the flip side? Meaning,
No.
we you,
I mean,
you
there's always risk. I mean, the market could shit itself tomorrow, but I suspect that's also why there's probably some provisions in there in the deal that protect them in that instance. So would you be willing to give up some upside to have some downside protection? But this part, a lot of these things, I have really strong views. This part here is speculation, is the most speculative. But I suspect he's going to do what he can to protect the value. And look, he's not doing this for let's see, September 27th is 3 months from now, 4 months. He's not doing this for a 4 month trade. He's doing this to give investors the opportunity to participate in something that he thinks can double, triple, because remember, it's a ton of his money. So while he cares about your money a lot, he cares most about his money, and you're in the same boat with him. So he says, okay, we're going to buy it at 35 billion euros. I think it could be worth 100 billion euros across 3 years. This is a great way to get this done.
That's an excellent insight. I appreciate that. So what do you think? Do you think there's more to the deal than meets the eye? Meaning, do you expect when this deal is official, when all the papers are signed? I know with a typical SPAC, there's a definitive agreement and there's usually an investor presentation that comes along with it. Do you expect some of the similar type of formalities in this deal? We're going to see a DA.
Absolutely, absolutely. I mean, look. Here's what happened. Mergers in the U.S. are done very different than mergers in Europe, and this is kind of a lot of things I'm doing is I'm getting into the weeds of what I learned across 25 years operating billion-dollar funds. So in the U.S., you don't have to disclose anything about a merger until you basically have a signed definitive agreement. What that means is while you may see a rumor in the Wall Street Journal or David Faber saying, "Oh, I'm hearing MGM might get bought by Amazon or whatever," there's no obligation to disclose, make a formal disclosure until you basically have all the deal kind of set. So that's why when a U.S. merger happens, all of a sudden there's a conference call and there's a big slide deck and all this other stuff. Europe is very different. The European regulators take a view that once you come to a material agreement, so that means you don't even have a definitive agreement, it's not even signed, that you should be making some sort of disclosure. So that process can happen very quickly. I suspect something happened that they came to a call it a hard handshake on Thursday, and Bellari goes to Ackman and says, "Okay, well, we got to announce it tomorrow." And it's like, "Oh yeah, like it's Europe." So they had to come out and make the announcement because of European regulatory law. That's not the way they wanted to do it, I'm sure, but that's what they're forced to from a regulatory perspective.
That's very informative. I did not realize that. So do you think that when this deal comes out and the investor presentation comes out, typically in a SPAC presentation, there's 3, 4, 5 year projections. This is what they're going to use with the money for. These are what we expect revenues to be. Do you think that Bill is pushing for certain aspects of maybe things that management may implement, or any other things that Bill's saying, look, to make this deal make sense, we need to see margin improvement. We need to see raise prices, across the 5 year time span. Do you expect any of that will come out in this investor presentation? Any of like the value add,
Look,
investor
I
add
think there's
that
yeah, I think there's going to be huge value add, but maybe not as much as you want. The sequence of events here, the definitive agreement will be signed sometime between now and June 22nd. That could be tomorrow, by the way. Like, there's no, like, I mean, the actual signing of the definitive agreement, and then the definitive agreement is approved at the AGM, annual general meeting, which is what AGM, that's what they call the meetings in Europe. Bellari has the votes, he has control, it'll get approved. At that point, they will be open and free to talk about the deal. Unlike a SPAC, where you can go out and throw a shit ton of projections, this is a European listing, so they will not. I think it will be unlikely that they will do that. Again, I'm going to say I don't know, but I would be surprised. Furthermore, I'm going to tell you though, with what the SEC has been doing in the SPAC world, you're not really going to see that much more in the SPAC world. Like the SEC has been breathing down the throat of the SPACs for somewhat valid reasons on that. But I think what's going to happen is you're going to see Bill Ackman on CNBC, on Bloomberg. He's going to go meet 100 institutions. He's going to go out and tell this story. And, he'll probably say a lot of what I'm saying just with a lot less F-bombs. But, he's going to be very proactive. This is very fucking important to him. I think he looks at this as his ability to create a Malone, a Buffett, like, those kinds of structures that he can then use across 20, 30 years to drive tremendous value. And I don't know him. Whitney knows him very well. I think he's actually excited about, I'll take this back. I know he's fucking excited about engaging retail investors and not just running institutional business. Because, guys like us that ran institutional money for years, I mean, it's actually a lot more satisfying to make money for, a non-giant institution or, like I said, the UAE. So I think he's taking this very seriously, and he's going to come out guns a-blazing. Does that mean he's going to have 5-year projections that are going to go through everything? I'm going to be surprised if that's the case, just because of European disclosure. But there's going to be a very, very heavy push on the deal, again, post June 22nd or somewhere around there. is my view.
Do you foresee that being as it is a European deal and it's projected to trade on the Amsterdam exchange or whatever it is, there's been a lot of people that are concerned about liquidity. Do you think that that is going to be an issue after the deal's announced and
Well,
executed?
look, there's a couple things that I think in this deal he would have preferred to be different, but were unavoidable. One of them is, and this is probably the most disappointing thing to people, this will be a Dutch listed stock. I do not think there will be an ADR or a US listing at the point where the distribution is made. The distribution will happen in Q4. I'm extremely confident that there won't be, just because in order to have an ADR or a listing, you would have had to pretty much have the paperwork in place already, and there's no paperwork having been filed on that, etc. Again, this is very deep in the weeds because I've followed this company in Bolloré for 20 years. Bolloré, the controller of Vivendi, has had all kinds of legal issues back and forth with the United States. Bolloré has a tremendous track record of value creation, has a mixed track record from some shareholders' perspective in terms of his, I don't know. People have a perception that he advantages himself. I don't know if I agree with that perception, but certainly he's done some complicated stuff that people were unhappy with. My point being, Bolloré was absolutely opposed to having a U.S. listing. So again, the bad news is there will be no, again, my opinion, there will be no U.S. listing prior to the distribution. The good news is the following. If you trade with any of the larger brokers, you can get the stock, no problem. I suspect Robinhood and all of the sort of emerging platforms, I don't suspect, I know they are moving towards, I'm friends with some of the original investors in Robinhood, they're moving towards being people allowed to trade foreign securities. I also think at some point they will do a regular way listing. They're going to have an independent board, but this isn't a process that takes, 6 weeks. It's a process that takes 6 months. So do I think that there will be a liquid ADR in 2022? Yeah, I think that could happen. Do I think there'll be a U.S. listing, a straight U.S. listing? I mean, probably not till 2023, and I'm going to blow your mind. I mean, I could see UMG getting bought before there's a U.S. listing, because, and we said this in our report, I look at this asset as so strategic. If I'm Amazon and I just paid $9 billion for friggin' MGM, I mean, I'll pay 80 billion or 50 billion for this in a nanosecond. It's just so much a better and more dominant business. So again, I know I'm giving long answers, but kind of covering a lot of ground. Bad news: no ADR U.S. listing at the listing. Good news: I don't think it really matters all that much, and eventually all of that will get sorted out.
Off topic, Enrique. What's your time limit here? Do you have till 7? Or sorry,
I have till 6, so I've got. I'm going to the Suns playoff game because I'm a huge Suns fan, and I'm sorry about the Jazz. Maybe we'll see them next round. But I gotta leave here at 6 to make the Suns game because I'm about 40 minutes away.
So it's 5.
I could go a little bit over, by the way, though.
So we got like 35 minutes. Okay, I just wanted to double check.
Yeah, I can maybe go 45. It's fine.
Okay, excellent. So I'll try to get through all my questions that have been sent to me, and then at the end we'll just turn it over to one-offs. So talking through kind of just what your long-term vision was, you posted, that UMG had grown their streaming revenue by I think it was 20 some odd percent, because they have improving margins. They have, a non-controlled, I think you said it was a non-controlled company. And because they own the content, they could likely command a better premium. And kind of in your model, I think that you said that you could see UMG from day one trading be valued, somewhere between, $17 all the way up to, kind of a high end scenario of roughly $25.
Yeah. Let's do this though. I'm gonna tell you how Bill would think about it, because remember, although I don't have nearly his fucking money, I am Bill. Like, we did the same thing for 25 years. This is where he starts. Okay, this is a fucking great business. So I actually have a record label. Okay, and we sell my Project M. We've grown from 3 million to 20 million of revenue. Half of that has been vinyl records that we sell. I'm actually buying a stake in a vinyl record pressing plant as we speak. So I know these businesses very, very well. And Fundamentally, the music business is this, and it's very important to understand this. You pay X to record an album. That X is a hell of a lot less than it cost to make Army of the Dead on Netflix, which was over $100 million with Zack Snyder. There's no album on earth that cost $100 million. You then have that IP, and you own that IP basically until infinity. So while in year one you make a little bit, the rest of the lifetime of everyone's lifetime, as long as the music is relevant, you make money, and it's 100% incremental margins. I know you know this, but I really want to cement it in people's heads. The second wave of this, and we made this analogy, I think it was in the report, I'm not sure, this is a little wonky, but there are all these software companies, like Adobe was the big one, that went from a model where they were doing one-time sales. I would buy Adobe. Microsoft did it too, but Adobe was the famous one. I paid $300 for Adobe Suite, and then what they did is they said, okay, I'm not going to charge you $300. I'm going to charge you $30, or I'm going to charge you nothing, but you're going to pay me $40 a year. And what happened is it transformed the business, and it actually became a much better business and more profitable. That's the analogy of what happened with streaming versus physical. And now we're on the other end of that. And because of smartphones and because of the digital metaverse, and when I'm talking about the digital metaverse, think about, like, I've got a 5-month-old, a 4-year-old, and an 8-year-old. My 8-year-old, who's coding and all that stuff, I mean, he spends on Minecraft, whatever, like, we don't even mind, like 4 or 5 hours a day. I mean, people are going to call me a bad parent. I don't care. But, but these kids, they're spending all their time in the digital world. We as adults now, because of COVID and work from home, we're spending all of our time in the digital world. So the digital world lends itself to music. You go on Roblox, there's music playing all the time. You're on a Peloton, there's music. In India, smartphone penetration is going up, and the first thing that people download is music. So I look at it and say, okay, we spend $10 million on an album, we own it forever, it's got 100% incremental margins, and I'm going to go from 1 billion people that are on streaming services to 5 billion people on streaming services, and this business has huge pricing power. You are buying the dominant franchise in that world. They're number one in catalog, they're number one in recorded music, and that's the big picture math that he looks at. So I did a little thing there where in the report where I just said pricing power. If you drove 8% pricing power for the next 5 years, you could double the EBITDA at total EBITDA at Universal. That's incredible. So that's what got him excited. Now, when we get into is it going to trade at 25 times? Is it going to trade at 23? Blah, blah, blah. Yes, I think that eventually it will trade at a premium to Warner. Frankly, I think both of them will trade much higher. I think that, again, the analogy, and I know I made the Charter versus Netflix analogy. It's not quite the same. Or sorry, the Charter versus Disney analogy. It's not quite the same. But I think that content owners that own content forever should be valued more highly than distribution platforms. And here's the thing. Spotify goes away tomorrow, and Apple's there, and Amazon's there, etc. What about the fucking Beatles? You're not there. There's no replacement for the Beatles or the Stones or Queen. There's never. I mean, again, you would listen to something else. But my point is, this is real estate that lasts forever. So I'll say this: that's what he's thinking about, big picture. Secondarily, I think that once it gets out there, they can tell the story. It becomes investable, etc. I think what'll happen is these multiples move higher. Not to mention, I think the company has a chance to fucking blow away numbers. I mean, we work with promoters doing festivals. The numbers you're going to see out of the music business in the next 18 months are going to melt people's fucking faces off.
Why the next 18 months? Just because it's a recovery play?
COVID. Yeah. So I don't think the streaming numbers are not going to slow down. And people want to buy things. They want to, dude. We deal with promoters in the rock and metal. I mean, in all of our areas, like concerts are selling out. They can't even they put them up and they sell out in 3 minutes. And you know what those people are going to do? They're going to buy 6 beers and 5 T-shirts and physical music there. And so all of this stuff, I think you're going to see a tremendous amount. So the places where they benefited, DTC, e-commerce, and streaming, I don't think miss a beat. And all of that physical business comes back. In 2020, Universal actually has the largest touring merchandise company, Bravado. A friend of mine founded it, and another friend ran it and sold it to Universal. That business was down, I think, 40% or 50% last year. I think that business will be, within 3 quarters, up 20 to 50% on 2019 numbers, and that's not in anyone's numbers. So when stocks beat numbers, this is really in the weeds. When you beat expectations, multiples go up. Okay, other than deep cyclicals, and I think that's what's going to happen here. You're going to have, they're going to be crushing numbers. You're finally, if I'm Amazon too, like or Apple, it's a lot more palatable to me to go out and buy a 100% independent publicly traded company than try to deal with Bellari and bid for it with him. And again, so I think you got a strategic asset that's going to blow away numbers, and people for the first time are going to be able to really get 100% exposure to it.
That's a great summary of that's excellent. I think it puts a lot of people at peace with the UM. I think the UMG is kind of the biggest unknown. Is people are worried about, how is UMG going to trade? How is it going to trade with liquidity? Some people are concerned about, if it not trading on the New York Stock Exchange, am I going to lose the margin that's backed up by my shares? So I think that puts a lot of, at least me, it puts me at ease understanding.
And like I said, I'm sure Bill, like, I'm sure he's like, yeah, guys, I would have, if I could have, like, whatever. He's going to say, I buy great businesses. Your value is protected. He can't control like what the OTC does with options and what your margin accounts does. And again, it's not that he doesn't care. Like, I'm sure he does, but he's mostly focused on turning 4 billion into 14 billion. That's and so sometimes when you're doing that, you can't satisfy every shareholder out there. So again, because he's me, right? We're just kind of we did the same thing. You're going to focus on the big picture and how do you turn the 4 into 14, and then that's where he's going to spend his time.
And that's fair. So moving on. So UMG, you have a high level of confidence in the success of UMG. Let's talk about RemainCo. So you have this entity 1.5 billion with the option to go up to 3 billion. It's no longer going to trade as a SPAC because the SPAC is being completed with the UMG purchase. So you have this entity 1.5 to 3 billion, no longer controlled by the rules of a SPAC. Do you see that as a benefit or a detriment? And what are the kind of the upside and downsides that you see to that? So
absolutely a benefit. Absolutely benefit. Let me make it simple. Hey, I got $1 billion. I want to do a deal with you. Company says, cool, let's do it. Now the SPAC was trading at 10.20. It trades at 9.96 immediately after the announcement of the deal, because that's what's happening at every fucking, or 90% of the SPACs out there. And all of a sudden the management goes, oh shit, is the deal going to come through? Am I actually going to get my $1 billion? In this case, he says, yes, you're going to get your billion. I've got the money. You're guaranteed to get it. So if I am a selling company, I much prefer this structure. The second is the biggest weakness. There's two big weaknesses. Well, there's one fundamental weakness in the SPAC structure that I'm willing to get over, but mostly because I can always buy the deals I want. And I have a SPAC focused newsletter that we launched last November, which is this: the sponsors only get paid if they do a deal, and if they only have 2 years to get a deal done, they are in this position where in the second year they're incented to do a shitty deal. He doesn't have any of that, right? So he gets paid because he has a shit ton of money. Do you know? So look at the math for a second. He put $1.5 billion in. Do you know how much money is going into RemainCo in the beginning? $1.5 billion. Now he'll only own 29% of it, but he's much different. He says, like, okay, I've got $600 million of my real money in here. His promote is much smaller because this is the warrant structure and all that. And he just wants to get a great deal done, and he doesn't want a sword hanging over his head. So, in my opinion, with this structure, and I think that RemainCo is there because I suspect, and again, this is just speculation on my part, he had some sort of legal tax. There's a lot of pieces when you're moving all this shit around, especially because I think it's a Delaware company, so there's a lot more complication. This structure made sense. So it wasn't done in a vacuum of like, oh yeah, let's just do this. It was like, okay, how do we optimize things? And I know this from seeing the Malone stuff. So I think it's still the biggest SPAC-like thing out there because it's no longer a SPAC. It's got the ability to guarantee the money, and he doesn't have a deadline hanging over his head. So this is a better structure than what he had before.
Is there any? So obviously with the SPAC, you have the option to redeem your shares before the merger vote or whatever. Is that same downside protection here? for the investors, in the sense that as long as he doesn't acquire a company and they liquidate the shares, that you would get your money back. Is that still
I don't
likely?
have I don't have the so I'm going to admit I don't have the answer off the top of my head, but I will tell you this: what he did do in what I highly suspect would happen is what he just did. So what he just did was he basically said, I'm going to inject capital that's guaranteed capital. I'm also going to have the right to put in more capital. And then what he did is he said, if you want your NAV back, I will make a tender offer to you to get your NAV back. He cares deeply about the shareholders. I positively believe that. Also, I mean, for two reasons. Number one, he's not a dick. Number two is he's thinking about like the future and how he builds, a franchise. And so again, this is pure speculation. I highly suspect that's how he'd look at it. He would go to a company and say, look, I got a billion for guaranteed, right? Because it's my money that I'm going to put in, and we got another billion and a half. I think most people will vote for it, but if they don't, we'll redeem them. But again, that is pure speculation on my part. But his actions, look at his actions every single time he's taking a shareholder friendly action.
So in your letter, you had put that with all the deals that he's seen, you expect that RemainCo might close sometime in Q4 if he has a deal in the works. Do you think?
I didn't say I expect. I said it could.
It could.
Okay, so let's put it a little different. I don't know if I expect it to, but it damn well could, because again, there's this. I see sometimes this crazy narrative of like, well, does he have any more deals? I'm like, I think it's the opposite. I think he's got too many deals, and that's why the guy just took one SPAC, used it, and formed two more SPACs. They're not technically SPACs. I'm not getting into that. Two more vehicles with the ability to launch an infinite amount more vehicles with the incremental sparks. So I think he's seeing, and again, where he was, what's interesting with RemainCo versus Spark is one is a size that's smaller than what he had, so he can look at great deals that were probably too small for him, but still big. And then the other is bigger than what he had. So now he's got the whole thing. And with the corporate spinoffs, this is the other thing. He just opened a whole new market. You'd never had a SPAC, as far as I know. I mean, there might be some small piece that had done a corporate spinout. Like, think how many was. Think of YouTube at Google. Okay, at some point, what if they're from a regulatory perspective, they come in and say, Google has to spin out YouTube. I'm not saying any of that's going to happen, obviously. But like, he's now got a vehicle. He's shown he's shareholder friendly. He helped Bulari out with a tax issue. So I think that there's more opportunity, not less.
So then talking about Spark, so why the sheer magnitude? I mean, that is an absolutely massive potential entity. Do you think that that's going to be prohibitive, or do you think that that's just going to just give you the full range of options? Like, do you think there's any intent with the size? Do you think that potentially do you think potentially Bill could have something up his sleeve for that as well?
I mean, Bloomberg. It's just again speculation, but Bloomberg, if it's $100 billion company, look, he just paid $4 billion for 10% of a company. If Bloomberg's $100 billion company, I don't know what the fuck Bloomberg's worth. I'm just throwing this out there. He's positioned himself so he can do the mega deals that no one can do. He can do the smaller deals. I mean, he doesn't give a shit about doing a $500 million deal because he's Bill Ackman and he runs billions and billions of dollars. But he's put himself so that he can be maximum opportunistic with the maximum amount of speed, because that's the other thing, that all the structures that he's doing can move much quicker than a traditional shareholder vote structure. Okay, so he's built a platform. He's got multiple groups of capital at different sizes with the most attractive platform and the ability to move quickly. So yes, do I think he put 10 billion? Was 10 billion an accident? Hell no. He thinks he can deploy 10 billion. That's why. And by the way, if he had somebody who could do 20 billion, he might have done 20 billion. But and he still might. But I don't think the guy like this doesn't do things by accident. It's very thoughtful the way why he's doing something. May not always turn out how he wants, but it's very thoughtful going in.
In terms of the rights, you had said that you believe the fact that there's no upfront capital, they have a 5-year expiry, that they could be valued somewhere in the 5 to 8 range, and they're really kind of being overlooked right now.
Yeah,
You,
I'll tell you, some people had, I'll just go into this. Some people had some good points about, some of the other rights that are out there in similar structures and the fact that they trade under a dollar. And, look, I think that when you're doing this analysis, the answer is maybe. I looked at it and said this, okay? Um, there was $20 of NAV, and the stock not X the warrants and the Tontine warrants. I guess we're in there, but like we could talk about Spark 2, Spark 3, Spark Infinity. But the stock consistently traded, other than the other day, at a 20-25% premium to that. Or if you sort of said 20, the NAV is zero, is the strike, then if the premium was a call, it traded at $5, right? Most of the time the stock was above $5. So obviously people were ascribing value to this. Now, when it first comes out, because it's only the right, etc., will it trade that high? I don't know. There's a couple other factors though. What are the other deals he does? How well do they go? If he does a great RemainCo deal, I think that's going to help Spark right away. And the other thing is, I think he's going to get out there and talk about the value of Spark 2, Spark 3, Spark 4. So there's this thing here that's happening where he's basically saying, I'm going to let you into my club where I have this access to all the best deals in the world and capital and a great deal team and all this, but you only get to play if you play, right? And so if you go down, so I'm going to go back to Malone. Malone had a company called TCI, Telecommunications Inc. It was his original cable company. If you do a little diagram and take TCI stock from probably 1990, it now is equal to like 32 different companies or something sick. You've made thousands of percent of return because what you did is you allocated your capital with a great capital allocator who is willing to accept and embrace complexity to get the best economic outcome. And that to me is what we're dealing with PSTH, PSTH RemainCo, and Spark 1 through 50. You're saying, okay, I think this guy's going to be a great allocator of capital. So getting back to the value of Spark, I don't know. Maybe it trades at 50 cents. Maybe it trades at $5 coming out of the gates. I think it's going to move up towards those values, though, because people are going to have a great deal of confidence. And by the way, in the analysis, we didn't deal with the Tontine warrants, so I didn't even put those in there. Again, I didn't really try to quantify Spark 2, Spark 3, Spark 4. So I think people had some fair points about the other rights that are out there. I think this right trades at a dramatic premium to those, just like the Pershing Square was trading a dramatic premium to any of the other SPACs. So I guess I sort of say, well, if it did it for that, it'll probably do it for this. But again, it's not like a law of physics that's going to happen.
So talk me through specifically the warrants you had just mentioned. So I've had a hard time understanding exactly why you believe
you just went to mute for a second there, Matt.
Oh, I just said that if you could talk through the warrants
a
little bit.
Matt, is that you or me? Because you're going in and out for me.
I'm not sure.
Okay, now you're good.
Okay, if you could talk through the warrants a little bit. So with RemainCo, it's my understanding that the Tontine warrants are not going to apply at all to UMG. They're only going to apply to RemainCo, and they're going to be adjusted proportionally on the strike. Is that how you understand it?
My understanding is this, okay? And we've gone through this a lot, and I know there's an alternate view of this, but I'm pretty confident with mine. Again, I can be wrong, guys. Like it's not like I have some, secret insight or something like that.
No, we're not holding you to anything. We're trying to understand it better too, because we're not.
This is what's going to happen. There are outstanding warrants. They're trading today. Those warrants, upon the completion of the signed deal, and upon the completion of the redemption period, where people can redeem for $20, I don't think anyone's going to redeem for $20 because the stock's trading at 23. They will figure out how many shares there are, and then they will go and do a warrant exchange offer. That warrant exchange offer probably happens sometime, I think, October, November. You go back into page 149 of the prospectus and you can figure out the math of what the warrant exchange offer is. I'm going to come back to this because he did something so awesome for warrant holders. It's so in the weeds, but it's really great. The Tontine rights, though, or warrants, but I almost think of them as rights, I do not believe will be issued until after the UMG distribution. So they will reference RemainCo, and let's say RemainCo is trading at $23 like it is right now. and let's say that UMG shares are issued at $15, okay, just picking numbers, then the strike of Remainco, the share price will be $8, and at that point, the warrants will be set with a strike price of $8. He can't set the Tontine warrant strike price until he does the distribution of the UMG shares, and it's clear from the document he's not going to issue warrants on top of the UMG shares. It is a separate thing. So existing warrants get cleaned up first, and then Tontine warrants get cleaned up post the distribution. At that point, by the way, he has no more warrants, which is another thing that if I'm a company selling to a SPAC, I go, well, what the fuck happens with these warrants? When did these come in? Blah, blah, blah. Now he's got a clean structure. I actually think the warrants are a downside on what you call it. And my partner Gabe, for those of you who listen to our podcast, we've got a podcast called Hard Money $1 Million Podcast, is pointing out the language that confused people is the shareholder of record date, which is a legal term that doesn't impact economics. I mean, we could go really deep in the weeds. I think it's not necessarily worth it. But again, the existing warrants get taken out on the warrant exchange offer, which is done by Thanksgiving, and the Tontine warrants are distributed or decided and distributed post the distribution of UMG shares, which I think will happen sometime post Thanksgiving and, call it December.
Very interesting. Let me ask you this. So warrants looks like they're going to be taken care of relatively soon. Getting back to Spark, and this is a question I've had. So with PSTH, Bill basically said the vast majority of his time and 2/3 of his team's time was focused on finding a deal for PSTH. Do you think that Spark and Remainco are going to have that similar level of effort? Meaning, is that going to be his focus?
Absolutely.
And what, why is that? Is it because?
Because why? Because again, I'm sharing here over and over. He's looking at this as a generational vehicle. This is not. He's looking at it again. This is my view, and I haven't spoken to him about this. But I think he looks at it as a platform. And so he says, I have the ability to create a platform and a core competency, just the same way that Malone does. Where success in deals begets more success in deals. So. The fact that he said 2/3 or 3/4 of his time was focused on PSTH, well, now the original PSTH is turned into UMG shares, and now he's got two vehicles because he figured out the other thing too. I mean, he had a SPAC years ago with Burger King, but now he's like, well, shit, I got so many fucking deals. Why don't I do two of these and set myself up for, Spark 3 through 10? Because I think we have that kind of opportunity. So nothing changes that.
So the market's really expensive right now. Why would he not maybe sit and wait? Potentially.
No one said he's going to deploy the capital, but he doesn't just because he has the vehicle. And that's the other thing. You just made one of his points is he goes, well, and whether the market's expensive or not, we could go back and forth on a lot of levels of that. But now he's like, I can do a deal whenever. I can do a deal whenever I want, and I've got guaranteed capital. You know what's going to happen to all these SPACs? They don't have guaranteed capital because they need the shareholder vote, and they've got this giant sword of Damocles hanging over their head. And they're going to do shitty deals. He can wait, and he can do a bigger deal than anyone else. It's an incredible position of flexibility.
So with all these great things, why is the market not appreciating it? Does it need more time? Does Bill need to get out on the media and sell it like you've said? What do you think? Obviously it's early. Do you think that in due time that people will recognize the opportunity that's in front of them?
Absolutely. And look, this is the way this goes. And we see this in the Malone deals. Again, this is where I've got a lot of experience with a guy who's done the same thing super successfully for 30 years. So you have a stock. There are 1 million shareholders. Those 1 million shareholders have all kinds of different reasons why they're shareholders. Baupost and Ontario, our state territory of Ontario pension fund, basically say, you know what, this guy is a great capital allocator. This is a great way to participate with him. I'm in this for the next 10 years. Meanwhile, on the other side, there's some people that said, oh, I think he's going to buy Stripe or SpaceX or Starlink. Okay. And so, and again, I am a huge proponent of the retail investor. I love what's happening. We've thrown ourselves in the thick of it. Okay. My goal is to be able to bring this kind of institutional knowledge and distill it and share it so that people can empower themselves to make even fucking more money and hopefully not get their faces ripped off. But what happened was, of the million shareholders, there were a bunch that were expecting a certain kind of thing, and they certainly didn't get it. So what happens if you order, you're sitting there and you order an ice cream sundae and they show up with steak? What's your first reaction? Well, some people will say, okay, that looks like a fucking good steak. I didn't really order steak. I wasn't in the mood for steak, but damn, that looks like a good steak. Some people say, well, I thought I was going to have a big old ice cream sundae. Fuck this shit, right? So what he did is he served up a big piece of steak instead of an ice cream sundae. Some people sent it back. Other people decided to keep it. And now some other people are going to say, oh, look at those 5 steaks that no one's eating. That looks like a pretty juicy steak to me. I'm going to eat that because it's also cheaper. It's 10% off or 20% off from where it was when they first did it. But that's a big surprise, an ice cream sundae to a steak. That's a big deal. It's human nature that some group of people were going to sell the shares. And this thing is complicated as fuck. I said in all my comments, I spent 26 hours on this damn thing, and I think I'm 95% of the way there, and I've been doing this for 25 years,
And you had mentioned that you think the sell-off will probably be done, if it's not done already, that it'll be done in short order, sometime maybe even this week. At that point, the market will likely hopefully appreciate it at that time.
Stock was up 4% today. I don't think that was because of me. I think you had people freaked out, and they're mostly gone, and it's a good deal. I don't think it's a good deal. I think it's a great deal. I'm not saying the stock bottom. Anything could fucking happen. But, let me put it this way. I'm looking 3 months out. I feel real good about this stock being in the 25 to 30 range.
That's exciting. We only have a few minutes left. I want to get some people that might have some questions. If you have a question, if you wouldn't mind, request to speak, as long as that's okay with you, Enrique.
Mm-hmm.
And then whenever you're out of time, just let me know.
Sure.
But I just want to reiterate, I really appreciate you doing this on short order. You have been invaluable. This is excellent. I think it's made a lot of us feel better about our investment. I think a lot of people were kind of turned off by the complexity initially, and we just didn't realize what we had. So I really appreciate you clarifying all that.
And I get that, man. And I think Bill gets it too. Like, it's, but again, it's like, do I do this awesome deal, but it's going to be really complex? But ultimately, if people are patient and they look through it, it's going to be a fucking home run. I want to make everyone happy, but I mostly want to turn my 4 billion into 14, or more importantly, my 5 into 50. And I think that's where it came down. And let me just say too, man, markets are humbling. I get shit wrong all the time. I think I got most of this down, but I don't know. But what I do have is a ton of experience analyzing this, knowledge of the capital markets, knowledge of European regulators, knowledge of these businesses, etc. So after 25 years of making this my life's work, I'm a lot more right than I am wrong. Doesn't mean I'm not wrong, and it doesn't mean, actually, it's been super helpful on Twitter today. People helped me. There were a couple little things that were clarified that I was like, oh shit, and made us double check our work. So I love this process. So.
Well, we appreciate taking the time to help educate us. First question, I'm gonna let Connor Gleason ask a question. So I'm gonna add him as speaker.
Hello,
Connor, you're on.
Oh, hey, sorry, cut out for a second. Hey, Enrique, thanks. Huge fan of you, the pod, the Hard Money family, and obviously Empire. I'm curious how you feel about near the money calls for PSTH, and in general, your thoughts on, if folks are going to be investing in things like SPACs, where this distribution and not having an ADR is, some cause of concern for some folks. Would you recommend moving off of a Robinhood and into, say, a Fidelity or a more traditional brokerage for most retail investors?
I mean, on the second one, first off, call Robinhood. I haven't gone through. Look, I focused a lot on the deal and Pershing. I didn't go through, call the OTC to ask about what's happening to the options, or call each of the individual brokers to figure out what's going to happen. As a general rule, I would say I would personally only have a brokerage account I would want a brokerage account with the least cost and the most flexibility. And to the extent that my brokerage account doesn't allow me to do things that I think can drive value, I would be, that's probably not a good fit for me. I can't speak to anyone else. I think Robinhood's an awesome, awesome business. I also think Robinhood will absolutely be able to handle this at some point. Is that going to be pre-distribution? I don't know. Personally, I would only have a brokerage that I can trade foreign stocks, but I also know a lot about foreign stocks. And I think if you call any of them, and again, I can't speak to Robinhood, they should be able to turn it on. The call options. I'm going to go down this road real quick. The people that got fucked the most in this were actually the call holders, especially the leap holders. What happened here was Gabe did a great analogy here, where he basically said, imagine if MicroStrategy, the company that owns all the Bitcoin, came out. So imagine you had calls in MicroStrategy, and one day MicroStrategy comes out and says, "Hey guys, I just sold all of our Bitcoin, and I'm going to pay a 75% dividend, okay, in cash." Well, the volatility in MicroStrategy would get fucking crushed, because I went from something that was 100% Bitcoin vol to something that's 75% of the vol's gone. And with options, well, a ton of the value is volatility. That's kind of what happened here in the option structure of PSTH. It all happened on Friday. Like it was done within an hour. What Bill did, which is really great, is in the warrants, you still get a 42 vol. Because I want you to think about the warrants for a second. There's no way a 23 struck warrant with the stock at 23 that's going to be redeemed in 3 months would ever trade at $5 when you know that 3/4 of the value is UMG. It would trade at 50 cents. But instead, I didn't see where the warrants are trading, $5 or $6. Because he did that table, he basically protected the warrant holders. The call holders didn't get protected. So this is what I do with the stock, the warrants, and the options. I think it goes up. I buy the stock. The warrants are a leveraged pay in the stock at this point. I buy the warrants. The call options, I wouldn't touch any strike before November. Because what'll happen is I think that when if you read the OTC stuff, and there were a couple good threads on Reddit, we're going to do a thread tomorrow about this option stuff. What we think is going to happen, the OTC, we think will treat it like a dividend, which just means that when we do what I did before, if they issue $15 of UMG, the strike will go from 23 to 8, just like Remainco, and any call option that had a 25 strike will be reduced by 15 and fall to a 10 strike or something like that. But because of the difference in nominal and the collapse in vol, those prices collapsed. So to be frank, maybe I just wouldn't fuck with call options on it. I don't know. Like me personally, I know that's true. But that's my thought about what will happen.
So what about leaps? So obviously the implied volatility is crushed, but leaps, if you have an appreciating business, what's your thoughts on 2023 leaps?
Again, I think that what's going to happen. Gabe's correcting me because he's listening and he's on WhatsApp. Options Clearing Corp, not OTC. Sorry, I knew that actually. But look, I think they're probably, again, but this is pure speculation. I have not dug into this. The way the options markets work now, or the options markets work, they're probably priced right, meaning that the market adjusts, because if not, something would be arbed out. But I haven't dug into it enough. But I think they'll get repriced by whatever the UMG distribution is on the strike. So, if you think it's $15 and you're buying a $30 leap, when you're looking at pricing that leap, just say to yourself, Gabe says, yeah, the options are fucking priced right. I think that, if you're buying a $30 leap, just imagine it's a $15 leap and look where the leap's trading and calculate your value off of that.
Just one question, and I'll hand it over again. But do you see other SPAC managers taking the same playbook and copying it? I think like Chamath and others.
Yeah, I don't know who, but I think guys are gonna begin to take a look at this. I mean, I'm really good friends with the Eagle guys, Harry Sloan and Jeff Sagansky. They were looking to do a SPAC that could do like 8 deals at once, kind of thing. So there's guys, I don't know. Look, Wall Street is very simple in some ways. If people figure out something that works, other people are going to do it. So, I think this works, and I think other people will do it. Well, what the fuck Chamath does, I have no fucking clue. But yeah, I think that'll happen. Are we still there? Did I lose people?
Oh no, sorry, I moved
Okay.
podcast that was never named up to speaker. I moved Connor down.
Yeah.
You want to ask a question, podcast?
Yes. Thanks, Matt. Thanks, Enrique. This has been awesome. I've heard a lot of good things that make me excited because I am also an investor in this pretty heavily. But I wonder, after reviewing all this and spending all this time, are there any aspects about it that you don't like, that you are actually bearish about? And thanks again. Hanging up.
Yeah, I mean, look, it just depends on your time frame, right? Am I, does it have more or less upside post this than it did pre this in the next month? It's a complicated deal. It's gonna take time to digest, But I got to tell you, I don't spend a lot of time trying to figure out how to make 30% in the next month, because while you may have some opportunities to do that in today's markets, that's not a sustainable model. Where I spend my time is trying to figure out how to make 100% in the next, 3 years or 18 months or something like that. That to me is something that's sustainable across market cycle, etc. So is it as pure volatile as it was before? No. And if that's what you're doing this for, God bless you. Which is totally valid. This maybe isn't this isn't your ice cream sundae. This is your steak. Do I look at anything in the deal that I think I would have done differently? Not really. He's a smart dude. I think he actually cares. Um, you know, and I'll have to think about it a little bit more. I'll post on Twitter if I'm going to be at the Suns game. If I come up with something, I'll put it up there about, hey Bill, why didn't you fucking do this?
All right, I'm gonna move Marvin to speaker, and then I've told Cook Capital he can maybe ask a question as long as he doesn't bring up Subway. So I'm gonna move Marvin to speaker.
He can bring up Subway. I don't care.
Hi, Enrique. Thanks again. I appreciate it. My question is on the Tontine warrants. I think a lot of people were expecting participation in whatever deal was signed by the Tontine warrants. Do you think that was intentional? Do you think that the SEC kind of put the kibosh on that whole thing? Do you think that there's more to come on that front? I think that's part of the unique structure that a lot of us were kind of, I won't say banking on, but excited about.
Well, I mean, look, you still have participation. You got participation in the Spark. So, I think that he just sort of, I don't, it's not kicking the can, but the Tontine warrants will, oh, sorry, Remainco. I misspoke, So he announced a deal. That deal's done. You still have the Tontine warrants, and the Tontine warrants still will apply to the next deal he's going to do. So I don't know, I don't, to a certain extent, don't know what changed. I guess it could have been, well, are we going to get more upside to the UMG deal? This is a different kind of deal. There's no doubt about it. But I look at it and say, I still have that optionality. So, that's how the structure went down. And I think a lot of this has to do with the deal he had. I legitimately think what happened here, he went down this road and he just said, fuck, this is such a good business. Like, I didn't know how good of it. I've been in the music business for the last 5 years, by the way. So I knew it, I know it backwards and forwards. But I think he was just like, I've never seen anything like this. I gotta participate. I think that's what drove him here. So, but you still have the Tontine warrants on Marenco.
Got it. Thanks.
All right.
Someone said that the analogy should have been we ordered a 6-inch and we got a foot long. I don't know. But,
Well, Cook's familiar with taking a foot long, so here he'll
yeah, exactly.
Hey, am I on? Cool. Thanks, Mattress, for setting this up. You did a really good job. And Enrique, I thought your paper was awesome, man. And thank you very much for all the time today, talking through everything. So my question, I think that a lot of investors in PSTH, like I'm a day one investor, and I think that most of the community was very surprised when the target dropped. Very surprised and probably angry because I think it was widely believed by most people that it was going to be Subway. So, I mean, what are your thoughts on that? And do you think that there's any chance that Spark or PSTH Remainco are in advanced talks with Subway?
Cook.
I mean, hold on. No, I'll address it. Number one, I think he did a fucking great deal, and that was his goal, and he accomplished it. And I think this business blows the fuck out of Subway. And number two, sure, maybe. Yeah, I mean, I think that answer is kind of obvious, right? If
All
it's a
right.
great business, and they're open to doing a deal, I'm sure, and I guarantee you, I can't guarantee anything. I suspect he's had a conversation with them. So,
All right. Thanks for answering that. What is? I think this will be the last one from Bammy, and then we'll end it. Bammy, go ahead. I think you should be connecting. Bammy's not connecting, so Aruthus, you're next.
Sorry now. Sorry about that.
Oh.
Can you hear me now?
Yeah, we can hear you.
Yeah, so I actually just had a quick question because I was trying to look into it. I have Fidelity. I was just trying to figure out what exactly does it mean for me holding something on the Euronext, because I was hearing people talk about fees and I've tried to look it up and it's just a bit difficult to find.
yeah, I mean, you gotta talk to your broker. I can't answer that. I, my understanding is most of the well-established brokers should be able to handle all of the issues around a large liquid stock with minimal transaction costs. The Dutch exchange is a pretty good exchange, especially versus the fucking French exchange. So, but your broker's going to have to be the one that answers that. And I want to reiterate, I mean, I'm sure Bill wishes he could have done something that, was just pure NYSE listed, et cetera. But it's sort of like, you know, I got a great deal and it's going to be 1% annoying because of this thing.
Yeah.
Okay. I gotta take that trip, but you're going to have to talk to your broker on that.
Okay, appreciate it. Thanks for your time.
Yes, thank you. I don't want to keep Enrique for too long, but I think speaking for the group, I think everybody wants to thank you, Enrique. You've been great. We're going to let you get to your game. And maybe we can have something like this in a couple more weeks when a little bit more of the details have been provided to us. Hopefully,
Yeah.
presentation.
I'm happy to do it. I mean, a couple things, follow us at Hard Money Mag, at Hard Money Mag. Follow me at Enrique Abeyta, at Hard Money Pod. Check out Empire Financial Research. We take this shit very seriously. I'm doing this because I want to do this for the next 30 years of my life and figure out how to, really help people with the skills I developed. But, the thing that I just want to leave one last message. Imagine if people spent as much time thinking about the specific target and spent that time on thinking about the quality of the target and the actual business. Because I'm going to tell you, that's what motivates Bill. Bill's not sitting there and saying, how do I structure this? Bill's saying, what's a fucking great business? And that's the meat here, right? And maybe I wasn't even thinking this when I said steak versus Sunday. A Sunday's something that makes you feel real good for about an hour, and then you have the sugar high, and you're kind of sleepy, and I don't know, whatever. It's not the healthiest thing for you. Maybe steak's not healthy for you either, but a steak's something that's like, I'm full now for the next 6 hours. Focus on steak, not on fucking whippets. And I think that's a key to investing. It's a key in short-term investing. Make sure that you've got strategies that are proven, that have tested. If you're trading, make sure you're trading. And there's one thing I always say: either trade a lot or don't trade at all. Don't get caught in the middle. That's a mistake that just destroys people. But look, I think this is a great opportunity. I'm super impressed. I'll leave this one last thing there. I was short Valiant. I was one of the biggest short sellers in Valiant. When he did Valiant, I was like, what the fuck are you thinking? And what I'm so impressed by Bill, he's made mistakes and he learns from them and he fixes them. And now he's doing better than ever. So, I think you all have a great horse here. I would embrace the complexity and just be patient. It's probably people never made excess returns by being impatient. Let me put it that way. So.
Well, thank you again, Enrique. We'll let you get to your game, and if you wouldn't mind, will you ping your accounts and just ping me on them so I can send them to anybody that may follow me? I don't have a huge following, but that way.
How do I ping you with them? Where do I do that?
Just at @purple_mattress with your other tags, and I'll tweet it out.
Got it. At purple. Okay, no problem.
Thank you so much. Be safe at your game. Appreciate it.
Thanks. Take care.
All right, see you guys.